Who's ready for Turnaround Tuesday? Give me a Y. How are you, Warriors? Bran, how are you? Hi, Laura, Sinatra, AJ. Everyone doing okay? Tip of my hat to Kman on his call on cable.
Good morning, everybody. Good morning, Dale. Good early morning.
Yeah, nice call on cable.
Thank you.
There's no one short anymore.
I don't know. No,
I was
did.
stopped out.
I mean, they took all
They
the
took
stops
everybody.
out. Yeah, over 24.40 over these tops.
Mhm.
All these tops. Who's short now? So, you know, if we close back under this level, be aware. My turnaround Tuesday candidates are the dollar because, you know, it took out last week's low and we had an inside week last week. It's still early in the week, so we've taken out the previous 2 weeks lows in the range, and if it reverses and closes over 101.70, you got a 2-week reversal, which could kick off a pretty good rally, at least to above here. So taking a shot there, and S&P, trying the S&Ps for turnaround Tuesday as well. They're in Jim Welch's sell zone.
Yeah, 41 and a half, yeah?
Yeah, I mean, there's no divergence that I could find on, except maybe if I went to the 15. Nothing RSI-wise, even on the 15. Yeah.
I see a trend line coming in around 41 and a half.
Okay.
And also some fibs around there.
Okay.
Yeah, looks like a decent zone. Yeah, on sterling, I think if you look at cable, it's 124, 40, 50 holds or folds, I guess.
Yeah. And Euro looks like a real nice little stop hunt, you know, took out that little double top there.
Yes.
Took out all the stops above these two highs, and if it fails from here.
Euro should take out 109.50-60 really to get going, but for the time being, it's not happening, right?
Yeah. So those are my thoughts coming in. Also, so far, pretty shallow pullback in the end from yesterday's highs. You know, maybe we're in some type of corrected pattern, but I mean, this is not bearish to me after this advance.
And look, we held those levels from end of March, the 29th there, or the 30th, the 132.20 in dollar yen. We've held it.
Yeah.
Just a little further to the right, further to your right. Just that prior high there, the 29th.
This one.
29th, 30th, perhaps.
This high.
132.20, but basically 132.20, and then that's your range, in my opinion. 132.20, 133.80 figure, and as long as we're inside, dollar yen is perhaps neutral. What I said as well on the flow show, what is worth noting is that the 2 first days of the fiscal year in Japan, the Tokyo fixing was yen seller. So that's always one that I keep a keen eye on what yen is concerned for the start of the new fiscal year. You know?
Okay. Gold looked like it was gonna make its move towards you know, one more spike high, still could. Silver, you know, my gosh, it's been diverging for, you know, since where are we? Back here. So that's back in March, early March, in fact. So I know it sounds fantastic, and there've been some real great days, but this is sure a grinding bull market. You know, it's, even though prices have exploded, the character of the way it went up has me a little bit suspicious still. I mean, look, we're you know, we have a glaring divergence even at new highs. That's a pretty big spread. Haven't seen that for a while. So that's all I have. Why don't we get Stella in here?
Hello. Well,
Oh,
speaking of silver, I think you're absolutely
Okay.
right. It's when the market kind of gives you
chances to get into a trade, just before the train is leaving the station.
Yeah.
I think you need to be a little bit wary. This is me, Stelios, Bran, not Steve. Steve is the one with the heavy Greek accent. Okay. I'm the one with the, I'd like to think, English accent, or close to. Anyway, so what do I think about metals? Yeah,
You like to think being the key phrase there.
Yeah, exactly. What do I think about metals? They haven't broken out yet.
Yeah.
Bottom line. So as long as that's the case, I'm not getting into more longs. If anything, as you all know, a few days ago, I got out of half my long in silver and waiting to reload. Will I reload on a breakout higher? I'll be more than happy to. Otherwise, I wait for a pullback towards the low 22s. Gold is a little bit, I don't know about the downside of gold, but I think on a new high, I'm going to get...
Hey, guys.
Hello. Oh, Grega.
Hey, Grega.
Hello.
Hey.
He's about to say that I'm completely wrong. Or not.
Hey, Grega, welcome.
Hey. How are you guys?
So let's
Doing well?
give I know
Grega, you sound
if-
like you just came from a funeral.
No, I just came from lunch, so it's pretty similar.
Okay,
All right,
I'm
well,
not going to
Grega,
tell your
why don't-
wife.
why don't you take the screen and Steve will go, ask for wave counts from you. Okay. I'm
Yeah, sure.
gonna stop sharing right here.
Grega was on the Flow Show this morning. He was fantastic as always. So good for people to see his work here on Face as well.
Yeah, let's listen to someone who knows what they're talking about.
Yeah.
Oppositely from
Right.
Stelios, you mean?
Yeah, exactly.
Okay,
No,
so what
right.
do you want to talk
A
about?
wizard. Whatever's on your radar.
Well,
whatever.
Football, Grega, football.
Yeah, football. No football because I can play football since my knee injury. So please.
Okay, there's an S&P count for Grega.
Yeah, I mean, the S&P, in my opinion, obviously is bullish for the last few weeks. I think we can extend gains towards this August 2022 highs, but notice the VIX, which is coming back towards this range of 2022. And each time when we were here, the S&P 500 either has seen a very strong sell-off or at least temporary pullback, like it happened here last time. From that was from what was the month here where I have this one? Okay.
Yeah, rode that VIX, doing it again down here, buying July calls.
Yeah. No, I'm trying to say that from February down to March levels, right?
Yeah.
We have seen this sell-off when VIX was trading down here, and now we are again here at this lower side.
That's what I said.
Yeah. So what I think is that we could see potentially wave E retracement, especially when we see Monday, Tuesday, very strong move in risk on flows. Then towards the end of the week, especially ahead of jobs data, we could potentially see some stabilization. But
Can I ask you something on this count, Grega? Is it possible that that if we stall here, we don't get an E and it just takes out the C low? Do you have a count, an alternate for that?
That we see a break, you mean lower?
Yeah, a break that either that E doesn't hold above the trend line, like 3,900.
Yes, of course. Then we would go with this wave count, which suggests that we are in a wave 2 rally. Okay, but I'm not looking for this kind of scenario because I see dollar trading to the downside, and I think that there will be more dollar weakness coming. I see the US yields also turning down, especially like TLT, which I can also show it, also looks very bullish,
Very constructive,
for the next few weeks. So in my opinion, this all suggests that potentially stocks have more room to go. Also, I think it's worth to mention
the TLT rally because of a risk-off move. Maybe that's a catalyst.
Just a second. Let me show you.
Because the last big rally was during the sell-off in S&Ps, right?
Okay, so here's the TLT.
Yeah.
Okay. And you can see a pretty nice reversal to the upside, followed by a
Right.
three-wave pullback. So I think that we are setting up for another recovery here. At the same time, obviously, I see the 10-year treasury
3%.
also in this recovery mode. I think that we could extend all the way back to the previous fourth wave here from August 2022 highs. So it looks like that US yields could suffer more, and this could bring US dollar obviously lower while the stocks are currently here in uptrend. And also the crude oil is now finally trying to follow the risk on flows here. We have seen a pretty nice, impressive reversal after this fifth wave that came down from a triangle. We stabilized here above 63, 62 support, which was the major support for this year, in my opinion. So I think that this correction could stay in play for a while. And obviously, this is positive for commodity currencies. And with stocks being in uptrend, I think that currencies like NOK, Mexican peso, CAD could see more upside. And I've been actually looking for NOK recently, and it's finally, okay, that's, by the way, dollar NOK inverted, and this in orange is crude. And it's finally look like it's trying to catch the upside here on crude oil. So I think that NOK could potentially see more gains because of crude oil that could stay in uptrend. If you look here, we are breaking this trend line, and we could be headed towards the lower side of this, actually towards the lower potential neckline. So I would not say that this is the head and shoulder stop formation unless we will see this broken neckline. But at least in the short term, or for the next few weeks, this trend line could be retested, in my opinion, while the crude oil, which is here at the bottom, by the way, is in a recovery mode. So all looks like that we are headed in this with this risk on flows to see more strength and obviously opportunities not only on NOK. Also, if you look dollar Mexican peso, we are trading very nicely to the downside. So far, we were reversed from that trend line, and this trend line held was retested at the same time when crude oil actually bottomed. So now we are seeing the downtrend continuation, and this is the wave 5. Wave 5 should be made by 5 sub-waves, so I think that there's room for 17 target. This is also the triangle measurement. So I took the distance of a wave B here because it was the widest slack within this triangle, measured it from a breakout point, so I came out with around 17 target. But now when we are approaching these lows here, obviously it's not, it could be a little bit late for any shorts, but as I talked earlier on the flow show, whenever we want to join this downtrend, what I would want to see is an extended wave 3 with decisive break below that previous low, and then watch out for a wave 4 pullback to retest that levels before we look for potential shorts. Definitely don't want to be short at this level here, at these lows, because you never know, you could get some kind of a just spike before the market stabilizes for a bit. So you want to see in this downtrend continuation to be confirmed, actually, you want to see something decisively to the downside and then watch out for pullback. And this, obviously, this downtrend could stay in place as long as the previous low would then hold as a resistance. Okay, hope this makes sense. Also, let's take a look on gold. Now, gold, firstly, this COT chart, this one is quite interesting. So each time we talked about this last year, at the end of last year, when large speculators were heavily short, okay, when we approached similar levels to reading back in 2014, 2016, this was at late 2018, and then at the end of 2022, we have seen then a change in sentiment here. And so far, you can see that there's a very nice run up on gold, but notice that when we are approaching these highs here around 2000 level, still, if you look readings on green, large speculators have room to add to their longs to similar levels like we have experienced at late 2016 and then in 2022. So I think that since we have here room to add more, I think that we could see a retest of the all-time highs on gold. Looking at the wave count itself, so far we are obviously trying to stabilize here around 2000 level, very big level. So clearly it's not a surprise that bulls bears fight is going on here. But if you look here at back January swing highs and February, early February levels, obviously we are holding so far these levels very well. Okay. So in my opinion, this makes the perfect support for this wave 4. So there is room for more upside. I think that if we can finally pass and break 2000 level with a daily close price, of course, I think that there is room for $50 movement here for a wave 5. Also, gold silver ratio, which I'm sure that you talked a lot recently. This one is also breaking this trend line quite aggressively. It looks like the silver obviously can outperform, but if even we have gold who's showing up the bullish pattern, then we know what is the upside potential on silver. So I think that these metals in general are in uptrend, and I would not be surprised if silver, let me load this chart. Silver is going to see this broken trend line here. So I think that this obviously also signals for dollar weakness that we mentioned earlier. Also, maybe a quick look at the Ethereum. I'm talking about the Ethereum because we also shared PIP for our members in the F.A.C.E community. So here is very simple approach. Actually, there is a very strong uptrend, and more importantly, whenever there is a setback from the highs or maybe a recovery from a new low in a downtrend, only in 3 waves, then the trend should resume. And so far, we have seen a very nice 5 waves up, followed by this corrective setback. So we are already trading a new high. Now we will see if this can potentially close at this level above 1850. Then I think that there is even more upside potential here, especially because of this mania that is going on after Elon Musk changed its logo for Twitter. So I think it could be pretty volatile week here. Okay, so if we have any questions, anything, Dale, please let me know.
Anybody?
That's it.
Someone has asked about Aussie.
Aussie, well, yeah, I mean, it's pretty interesting that Aussie is somehow not following the risk on flows just yet. I think maybe it's more linked to RBA or to dovish expectations who were on hold recently. But before we go to the Aussie, maybe it's not bad idea to look at the Hang Seng index. We could potentially be building up a very nice head and shoulders pattern. And if this one would see more upside, then I think that Aussie could potentially also see the support. If we take a look on copper as well, looks like that we are building the bull flag here. So if this one can break out, then I think that Aussie can follow. Also, it's very interesting to say that despite this dovishness we haven't seen from the RBA, who were on hold today, we haven't seen any aggressive sell-off just yet. So I think that there can be a corrective setback going on now. And if despite RBI being on hold, Aussie could potentially hold this support here or even trade higher later today, then I think that Aussie could have more upside potential with this risk on flows and finally catch some bid here.
Okay. Anything else for Grega? Nat gas, which everyone's been looking for a bottom in nat gas for about 100 years.
Natural gas? Wait.
Yeah, you just had lunch. Should be full of it.
Yeah. Oh, wait. I have here.
I'm so funny. I think.
Is Blake away today?
No, he's just pulling pips out of the market. Oh, there
Okay,
you
so
go.
natural
Yes.
gas clearly still in this downtrend and
Getting
looking-
closer though, huh?
yeah. Let me look. Maybe it's better to focus on some longer term cycle analysis. We are clearly approaching some interesting levels here when you look back from 1990 actually. And I think that we could potentially bottom here, let's say this year, but it's very, I mean, I would not dare to say where we are going to bottom, but maybe even we could retest the 2020 levels here.
Wow. Okay. All right. Thank you, Grega.
Thank you.
Very cool. Okay. So anyone want to grab the screen? Blake, want to talk to your
Oh, good morning, guys. How's it going?
good? How are
Hey,
you?
Blake.
Hey, Grega. Thanks for joining us today. I'm just busy doing a few other things this morning, but hey, I was gonna say, great call, Kman on the cable. I did get stopped out of that one overnight. And you know, the cable, I don't know if you know, this is one of those that you know, every time it stops me out, it's usually like the top. So, you know, or the reversal. It was good enough to stop me out, and it tends to reverse after that. So I wouldn't put it past the pound if we get back below 124. You know, one of the things that I've looked at with the dollar is that we are, you know, hitting a new low here. We're at the 78 or 78% retracement. Relative strength is divergent. We're seeing the dollar really, you know, not move. I mean, you got the euro that they got a little false breakout above this. This is a 2021 trend line. You can see it from here. You know, we broke above that high barely, gave us a little false breakout, and I think that's like building a risk now for the bulls. And you know, the cable seemed like it was going up there on its own you know, merit, and you can see the cable's actually broken higher against the euro. You got the euro sterling that's breaking down. So I don't know, how convinced are you about this dollar move? Let's start with Kman. What do you think?
Well, I think you have to differentiate different pairs and different currencies versus the dollar. And as I was saying, I'm less impressed with the euro than what's happening in cable. I think cable, there's a couple of other things at play as well, even oil. But I'm less impressed with the euro. I really think we need to go above 109.50-60, as I was saying, to really keep on going. So I'm less impressed there. And if you also, if you look at Kiwis is not breaking above 63 figure 15. Aussie shied away. We're back at break level in the Aussie, so they're around this 67.35.40. So different dollar pairs have different looks, in my opinion. But for the sterling now, to me, it's 124.40.50 holds or folds. But yeah, in the euro, for instance, which is more than 50% of the Dixie, it's I'm not overly convinced that it's going to go much further today, at least.
Yeah, I mean, if you're looking at the sterling from a breakout point of view, and I agree with you. I think each dollar you kind of got to treat separately. You know, we got the Aussie that's obviously moved lower following the RBA. The RBA pretty much signaling that they're done. I mean, obviously that can change as well, but you know, the Aussie still is in a bearish consolidation. Kiwis, you know, struggling to get get much higher too. And then, you know, you've got you know, currencies on the flip side is you got the, you know, currencies like the Canadian that's been benefiting from the rally in crude. So you're right. I think you've got to approach each one of them individually. And so let me ask you this, and then I'll go over to Stelio. So where's the place that you want to play the dollar right now?
The long dollar?
No, it doesn't matter.
Oh, the dollar. No, I'm still short. I'm still long cable. But you know my trading style, right? I mean, goes up. I'm slicing a bit. I've sliced up to 125, hoping for it to come back down just a little bit to reload. This is the way I'm trading. But I do think cable has perhaps the better potential, looking around the whole dollar spectrum actually for pushing higher, because we've got and the risk side and the oil side and the fact that sterling, the UK may avoid a recession after all. We're seeing it on all the sterling crosses, right? So I think that's still to me at least, my favorite play. If I look at the other side, I'm rather interested to know what's going to happen after the RBNZ, because if Kiwi can't get above 63.15, then we may see a bigger setback, and perhaps Aussie as well, if we get back down below 30.40. So that's the other side of the dollar. Euro, I'm pretty neutral. Dollar yen, I'm really neutral, because I'm in a way a tad surprised. It was we saw so many yen selling over the two first Tokyo fixings of the fiscal year. So we have to be a bit careful what's happening in the dollar yen. Maybe better to play cross yen if you have an idea on the yen side.
Yeah. All right. Well, thanks for your input here. Stelios, what do you think as far as the dollar goes? Which way would you be playing the dollar at this point? I know you talked about silver, and I do worry that silver is really stalling on this long-term triangle resistance. But do you have any thoughts about the dollar and where we're going?
Good question. Silver is a dollar proxy, right? But I will agree with Kay. I think the cable having broken out of that channel is an important move. I would, if I want to be short dollars, cable I think is a very nice, a very nice way to do it, because it's broken, and technically it looks good. Now, if you want to be the other way, I think the euro is coming up to pretty important resistance. So I guess that gives me a bias in the euro pound, right? But anyway, I think, if you want to be looking at dollar longs, then I think we're coming to a pretty good level to be shorting the euro dollar as a risk reward trade. It's not, I'm not saying that I think the dollar is going to strengthen. On the contrary, I think in the medium term it's going to be weakening, but I think we're getting close to a level which kind of makes sense to be short euros against long dollars.
All right. What do you think could do you think the data is going to be like, you start looking at like the jobs report that's coming out on Friday. I mean, we saw the ISM data yesterday, and I mean, when you look at the ISM and you see it weakening, well, that's manufacturing, but we have services ISM, we have JOLTS data today, we've got ADP tomorrow. I think I want to say ISM services on Thursday. Is that correct? I'm just gonna confirm that. ISM services is on Thursday. Are you expecting data to really significantly weaken, here in the US?
To be completely honest, the jobs data, unless it's a huge number, either way, I don't think it's going to make such a huge difference, because, and I know it sounds controversial, but employment has been good for the past years in the US, after COVID. So I think inflation is the one that's going to be driving what the Fed does. So yes, obviously, I think I'm going to be looking at payrolls and ADP and all that, but I think those numbers, a disappointment in those numbers will bring a much bigger move than a beat. Obviously, if we're expecting 200,000 in the NFP and it comes in at 500, that's going to be a big old move in the markets. But I'm talking about small differences, like instead of 200, we get either 150 or 250. I think the 150 is going to bring a bigger move to the dollar than the 250. But having said all that, the market's still playing a cat and mouse with the Fed. The Fed are telling us that they're going to be. Bullard was saying the other day, well, we're going to need to raise rates higher. The market is not believing. So something has got to give. Last time it was the market that gave in to the Fed. This time, yeah, it's more difficult. I do think that inflation is going to keep dropping on a year-on-year basis, so that's going to make the Fed's job a little bit easier. But let's see payrolls on Friday.
Yeah. All right. Steve, I heard your voice here. Do you have any opinions on the dollar?
I think the path of least resistance is still lower from the for the dollar from what we've seen and higher for equities. I don't think anything has changed.
Okay. All right. All right. Sorry about that. I was just typing something else. And Dale, we didn't get your opinion here about the dollar. What do you think?
I'm looking for I need 101.70 for the trend break to get long the dollar and a close there by Friday. 102.70 would do it.
So, this trend line that
Yeah.
this one that you brought up
Yeah.
yesterday. That's the one
Yeah.
that you want to see broken.
Yeah.
Yeah. All right. Well, that makes sense. And I know you have a guest here today. I'm excited for the rest of the week. The rest of the week is going to be, in my opinion, going to be more of where the moves are coming. I'm going to be watching this cable to see if it's going to sustain these gains. I'm on the fence about it, even though I got stopped out of my short. And somebody asked, why is the pound so strong? I think we discussed a little earlier. It's more of like a positioning, type of, it's such a big range, and the cable is breaking out. As long as we're above 124, I wouldn't fade it. But if we get a false breakout like this week, or by the end of the day, or by the end of the week, I'm going to be a little skeptical about the cable. So that's going to be what's on my radar, and still really focusing on the yen pairs, and I'm playing the yen to the long side. So I'm shorting all these yen pairs. So anyway, Dale, I'm going to pass it over to you. I know you have an interview. I want to thank everybody for being here today. So it's all yours.
Thank you, team. Hiya, Chris. How are you?
Yeah, not bad, Dale. Good to speak. 3 months later. It takes some time.
See how time flies?
Yes, it certainly does, Dale.
I mean, it seems like, I think once I said that to someone and they said, well, Dale, I don't know if I'll be alive in 3 months. So anyway, Chris, it's great to meet you.
Hey, Justin.
Hello.
Steve, yes? I don't know, Steve. Anyway, so why don't you tell us a little bit about your journey and what you did. I went to your Twitter stream, and I took a look at what you wrote, and the one thing that caught my eye was that you look to OTT when you're analyzing the oil market. Is that correct?
Sorry, I didn't catch the word.
OOTT.
Oh yeah. I'm a member of that crew, you could say. Yeah.
Okay.
I can see you now. Well, excellent.
All right. So, what are your impressions about what happened with OPEC over the weekend?
OPEC. I have thought for 20 odd years that OPEC really hasn't had that much to do with what goes on in the with oil market pricing. The people who do are the people who actually set up and have operated the Intercontinental Exchange since 2001. Okay. I like to say that the oil market moves at tanker speed and the financial oil market moves at light speed, and the two things are not that connected. And I go way back. I mean, you've been in the market 40 years, Dale, have you?
Yeah.
Yeah. Well, I go back to market regulation. When I first started in the mid-80s, London Metal Exchange had just had the tin crisis, if you remember that, right?
Sure.
And that was a market meltdown, and that was when you had sovereigns who were essentially supporting the tin market price for a period of decades, and then subsequently you remember copper, and how the copper market was manipulated by Sumitomo for 10 years or so. And sort of commodity market 101, I always say, is that if producers can support the price, then they will. And it's a matter of sort of what funding is available to do that. And I've always looked, I'm a senior research fellow at the Institute for Strategy, Resilience and Security. It's actually where I'm sitting right now. And I've always looked at the macro picture, Dale, you know, the seriously macro picture, looking, well, what are the sort of, obviously it's the trade flows and it's the energy flows, and it's the real world flows. And how does that affect what goes on in the financial markets? And I went from market regulation in the early 80s. I became a director of the International Petroleum Exchange in 1990.
Which exchange again, Chris? Which one?
It was called the IPE. It's now ICE Futures
ICE.
Europe.
Okay, yeah.
Bought them over.
ICE was in New York. Wasn't it based in New York, ICE? Where it started?
ICE, I think ICE started in New York. I mean, it happened after I left IPE. IPE,
Okay.
I left in 1990, end of 96. I was responsible for the legal design of the UK natural gas balancing point contract, for instance.
Wow.
Basically, when you start trading CH4 molecules for profit, you need to have some sort of, risk management of it. And I was involved in sort of helping put that contract together, and more to the point, regulate it, come up with the regulatory regime. I was responsible for overseeing the Brent futures market back then, when it really was Brent. So I was in there at the dawn of that. I managed the deliveries of Northwest Europe gas oil for 6 years. So I came to understand the sort of physical market games that people played. And in the early days, Dale, you may laugh at this, when I started at IPE, the third month had never traded, right? All the trading was going on in months 1 and 2. That was when I started. It was such an early days, and it was only the Brent field. And then gradually, over the years, we saw other fields, Forties, Oseberg, F.A.C.E and whatnot come in. And I sort of grew with the job and got involved in sort of macro markets and regulation of them, putting together agreements with the Singapore Exchange, for instance. I introduced trading tools such as EFS, Exchange of Futures for Swaps, were brought in. Trading at settlement, options trading. I was a sort of green light regulator, you see, Dale, thinking of reasons that people could do something rather than reasons they shouldn't, Yeah. So that's my journey anyway.
Okay, and what is your current bailiwick that you're on public, on social media, posting on Twitter, seem to have kind of a tint towards crypto type things?
Yeah.
Blockchain, is that where you're spending your intellectual efforts now?
That's a really good question. 1998, I set up a .com, right? It was called Oil Clear. Well, it isn't called Nuclear. You see, I couldn't believe that people still confirmed trades with faxes and telexes back then. That was in 1998. So I raised £250,000 with some help to come up with basically a paper. You could say, take the paper out of that communication and come in with an online trade confirmation system. And it was called Nuclear, but oil was the first market that we did it with. And it consisted of a messaging system. So I could actually ring you up, Dale, and we could actually do a trade online and then put the details in. And then the trade went into a shared database, right? A shared market database, not a blockchain. That came later, and in my view is an aberration, but it was a shared database. And then the third element that brought it all together, which was a sort of innovation in, you could call it legal design, was basically a market user agreement, right? So that the moment that you and I clicked on that mouse and the transaction was captured in that shared database, we were legally bound by that on a global scale, right? That was the innovation. And I had directors of several exchanges put money in. I had, had some really, really interesting people put money into it because everybody could see the power of it. And everybody wanted to own it. So I should be a billionaire, right? Because but if the sell side owned it, the buy side wouldn't use it. And if the buy side owned it, the sell side wouldn't use it because what it was doing was capturing valuable market data. So I went to Platts, who had, 3,000 terminals or whatever it was, and suggested that they might be interested in working with it. And they thought about it for a couple of months, and then, in my view, probably made one of the worst decisions they ever did, which was they said no, because they thought it would take them into, regulation or whatever. And at that point, basically the funding sort of, ran out, because we've been working on it for 3 years. And it came to a halt, and there were other things happened I won't go into. But suffice to say that a year after we finished, the Intercontinental Exchange set up a new service called E-Confirm, right? Capturing OTC trades. And the year after that, the Chicago Merc set up a system called Trade Hub, capturing trades. So this actually makes a huge amount of money for them from, market data, because they captured off-exchange data. So that was my exposure, Dale, to, you could say, I call it financial technology now, but back then it was where law, accountancy, and online communication came together for the first time. So over the intervening period, I've sort of, I got involved here. Eventually, I fetched up here I was asked by the former Minister of Defence of the UK to become a senior research fellow at UCL, looking at, this is after the financial crash in 2008, when we came, 2 hours away from the cash machines being switched off, basically, and to look at, what does a resilient financial system even look like, right? And literally do some blue sky thinking and start from scratch and start from bottom up.
Do you think that we do today know what a resilient financial system looks like? Or are we seeing the cracks of what is not resilient and poorly managed? And let me ask you this, Chris, are you in the UK?
Sure.
I just guessed. Are you in the UK?
Yes, I'm sitting in London right now.
Okay, so the narrative I heard last year and for years now is that US banks cleaned up their balance sheets, because of Volcker rules, etc. And they were in better shape because the European banks never did that. And the narrative I'm hearing since SVB, from one guy I know who's a pretty, seasoned trader, is that the UK banks are better than the US. And now I'm starting to hear that European banks are in better shape than the US. What do you think?
I think that's probably true. I think that's probably true.
Why?
But I think it comes down to our financial system and the fact that it's not as sort of rigid. Certainly in the UK, our financial system is not that rigid. We're not as set about by rigid rules as maybe the US is, or certainly the US is. So there's a lot more flexibility here in our system between, say, the central bank and the Treasury in particular. There's a lot more flexibility here than people realize, okay? Because, we don't really have that many written rules. And so I think our flexibility is our greatest asset if we choose to use it. Europe and the ECB is a separate thing. I mean, to me, I don't see the euro as being any different from a token, quite frankly, because it's disconnected from the fiscal base, right? That's what the Europeans chose to do. A fiat currency normally is essentially based upon the productive capacity of a nation, and it's directly linked in many ways via taxation. Essentially, I won't go into all of that, but Europe doesn't have that. The ECB is set up to create tokens called euros. And then below that, you've got this target 2 clearing system where gazillions are shuttling around and very few people actually understand what's going on there. So I think they are in a position, if they choose to create a lot of euros, then, because the euros are sort of detached from reality for as long as
why are they going to an emergency Fed window for 60 billion?
Well, that's because
put out there.
That's because they're tied in. But that's because everybody is tied in to the dollar clearing system. I mean, the biggest window, as I understand it, into the real, into the non-dollar world is via London. Okay, that's always been the case. That most of the dollar flows, as I understand it, flow via the Bank of England. It's sort of a mega node. But Dale, I don't understand enough about the relationship between the euro and the and the dollar clearing system.
Okay.
But
Well,
sorry, go on.
all right. So banks, pension funds, everyone was buying paper well over a year ago, treasuries, whatever, at rates that hadn't been that low since the U.S. Civil War. And in fact, it's hard for me to believe that there aren't many institutions overseas in Europe and the UK when there was negative interest rates. Here, the 10-year got down to 1.6 or 2, but you still had a yield. I'm trying to imagine what it would be like to have bought into the market at negative rates where you're paying to hold that treasury, and then have this interest rate spike happen in a year where you're not only taking losses on principal, but you have to pay to keep the trade.
Yeah, I know.
You ever think about that?
Nobody could. It's mind bending. It really is.
So
yeah.
You don't think there are people stuck that, they're buying Greek bonds and everything at negative interest rates? They were negative even when they were positive to real rates, but they did go negative rates in Europe. So can you imagine owning bonds and that's only a year and a half ago?
I think it's unimaginable, really, isn't it? What's actually happened? But yeah. I do think that the major misunderstanding, I think, on the part of the policymakers is their response by raising interest rates, and I'll tell you why. Because this inflationary impulse came about from a massive blip impulse in energy prices, and those energy prices were driven by the futures markets, right? Because the benchmarks are futures benchmarks. Now, the point is that it's not bank credit, i.e. the monetary system, that has driven the inflation in energy prices. It is market leverage that has done that. So for the bank system to come in and for them then to start raising interest rates, which automatically increase costs for anybody who's actually got a mortgage or anybody who's actually got a loan, it's completely insane in my view as a response, because you don't address a market leverage impulse, in my view, with a bank credit response, and yet that's what they've done. So they basically put petrol on the inflation fire, in my view, Dale. They really have, because this is supply, this is cost driven. The only hard cost is energy cost, in my view. Okay. and that's what it is.
Okay, so this is what really your passion and what you're involved in right now. This website, right? Island Power. What island are we talking about?
We're talking about at the moment Pacific Islands right now. We just have literally today had a meeting. We talk about, you've heard of a grid. We talk about natural grids as distinct from national grids. And we're approaching the whole subject of sort of climate finance in a completely different way to the conventional. We don't get involved in arguments about whether, climate change is good, bad, indifferent, or whatever. We just say, well, for us, the higher the carbon fuel price, the more profit there is in saving it, right? That's the way we're talking about it. We're taking a pragmatic view that investment in carbon fuel savings is going to be one of the biggest trades, if not the biggest trade of the 21st century, because people don't realize how much waste there is from well to wheel, right? It's phenomenal how much there is from well to wheel. And if you actually start at the end use, which is what the Danes did in the 70s after the oil shock, they basically said, right, we don't have any oil and gas. We're just going to minimize our use of it for any given use of it.
I love this saying right here. Chris.
Oh, Yamani's
The Stone
brilliant,
Age
isn't it?
didn't end for lack of stone, and the
Yeah, yeah.
oil age will end long before the world runs out of oil.
Well, you see, the point
Okay.
there is, Dale, right, that we've reached a point at which oil is becoming unaffordable. I mean, there's bound to be one, but you know, people who are bullish at oil at $100 and $200 and $300, I'm saying, well, no, people can't afford to pay probably what we've got now. You can do if you print dollars to pay for oil denominated in dollars, but the rest of the world, Dale, is not in that is not in that position. And you know, there's been some really interesting sort of strategic moves been going on in the. You know, I have some sort of what's the word, unconventional views, for instance, about things like QE and what the purpose of that was, and looking at strategy from the sort of highest level. You know, and you've heard of energy dominance, haven't you? The US policy for energy dominance.
Sure. I mean, you know, wars are fought over it, so it's definitely not worth that. And hegemony, which we're trying to hang on our head to, that China's challenging by taking trips to Saudi Arabia. What do you think about that development? Chris, that the Chinese brokering a deal between two long-term rivals. I mean, we're not talking we're talking thousands of years between Saudis and Iranians. What do you think that's about? And what's your view on China with what you're trying to accomplish?
Well, I think that both of them obviously are big oil suppliers, and the Chinese are a big oil user, and they basically, because the Iranians have suffered from sanctions all this time, they're not exactly in a really good bargaining position vis-a-vis China. I mean, China is the buyer of last resort now. You know, the Russians are suffering from that. The Iranians are suffering from that. But you know, China isn't a military threat to anybody, in my opinion, although it suits the military-industrial complex to say that it is. China is all about economic power. And I have said for about 4 years that I think that China is basically becoming the buyer of last resort. And because there is a limit to what people can pay for oil products, the Chinese, who have been building refineries like they're going out of fashion, right, are going to be in a position to dump. They'll be in a position to dump products because they're buying cheaper oil from, you know, from Iran,
Russia.
cheaper oil from Russia, of course. So I have thought for some considerable time that China is about to take, you know, sort of pricing power and control from the producers.
So if they go from being the major buyer, and they are active in all commodity markets, grains, you name it. If they turn from being a buyer of last resort to being a seller of first resort, that's really going to change. That sounds pretty deflationary to me.
Well, yeah, it will deflate up to a point, but don't forget that as things stand, this is Yamani's point, all the hard oil, all the easy oil has been exploited, right? And it's this fundamental point about, you know, energy return on energy invested, okay? Where one barrel used to get you 35, you know, when you pumped it. Now, like, you know, shale, it might be less than 5. So
kind of like QE reached diminishing returns for dollars spent on QE to getting any kind of economic benefit.
It's a similar syndrome that you get the law of diminishing returns, absolutely. But you've got like an irresistible force of, you know, more and more expensive raw materials coming up against the immovable object of people being able to pay for it, right? So, and who's being squeezed behind that, or within that, is the middlemen. The middlemen are being squeezed on this. So what we're looking at is a shift to services, energy as a service. A lot of people you're seeing. So we're going to go away from oil and gas, I think, downstream to energy efficient means of providing heat, cooling, mobility, power, etc., etc. And Do you know who the first exponent was of the smartest trade I ever came across? Right, I'll tell you this. James Watt, the Scottish inventor, he didn't sell his new steam pumps to the Cornish tin mines, right? He gave them the use of it in exchange for a third of the coal they saved, right? So I call that pumping as a service, and it was essentially a swap of what was between his ears and carbon fuel savings at the retail price, because it was expensive to deliver coal to Cornwall, right? And that is exactly the model that we at Island Power are basically promoting and taking to the Pacific. We're saying, well, hang on a minute, you know, think of the cost of delivering carbon fuel to these little remote islands in Micronesia. It's massive, it's huge. So that if we can come in and take technologies like, say, ocean cooling, which they have in Hawaii, instead of air conditioning, right? You can just take the ocean cooling and provide the cool that way.
Wow.
It's coming up with smart solutions, but not ones which are necessarily high tech. You start with the ones which work now, and then
why do you feature wind power here on your website?
Yeah, well, wind power, we're big. You know, wind power is basically taking dollars out of the fresh air. You know, at the end of the, that's what you're doing. But you've got to come up with the right model, and instead of actually selling wind turbines, we're talking to wind turbine manufacturers about, well, you supply them and we'll give you a percentage of the production. And also, more to the point, you'll get a percentage of the savings in carbon fuel at the retail price, which that's like.
So it goes back to carbon credits again.
Yes, but carbon credits denominated in energy. Energy is valuable, right?
Okay. Yeah.
We're starting at the other end of the telescope, really. You know, and because we think that the markets have unnecessarily put middlemen in, when what we can do is directly connect the producer and the consumer, and monetize the flow that way. You know, and you know what the tool is that enables us to do that? It's called prepayment. Prepay credit.
Prepay.
Yeah, prepayment. Well, if you think about somebody who, prepay's been around a long time, like thousands of years. Yeah. Right. And Enron did it by the back door, of course.
Okay.
If you remember, sorry, go on.
No, so you're on social media like Twitter, and you have a website. What are you looking for, just to increase awareness on these platforms? Are you looking for people that might be interested in getting involved financially with some of your products? What's your purpose for being on social media?
Yeah, absolutely. I mean, we've sort of emerged from stealth mode quite recently, you know, because we literally were doing a lot of stuff, you know, behind the radar, under the radar screen. We launched what was called the Pacific Natural Grid Initiative June of last year. And then we've been literally out in the islands quite recently, finding pilots, proof of concept, bringing on board partners. My colleague Marcus, who's sitting with me, he was in Vanuatu, and we were looking at the sort of climate declarations that they come out with to make sure that the approach that we're putting forward can be implemented. So we'll be looking. What we're looking for now is, you know, we're looking for,
money.
I'll make note about smart investment. Obviously, we've got all of the people we need to make this thing happen are there. We're talking to funders right now, and we're just interested in, well, hang on a minute, how can we actually invest in these future flows? Basically, what you're looking at, Dale, is an energy return, right?
Yeah,
it's literally
like
getting an energy
the other structured in limited partnerships, like a lot of energy deals have been in the past.
Very much so, but without some of the risks that you've got in that. You are literally getting a return in, let's call them energy credits, prepaid. If I give you a credit that you can use to pay your energy bill, would you accept it? Yeah. And the answer that most people would say is, well, yes, I actually would. You know, it's exposure to the energy price. Now, lots of ETFs and ETPs have been doing,
especially my natural gas bill this winter in California.
Well,
I've never seen two
yeah.
charts move in opposite directions. Nat gas almost under $2 and the highest we've ever
Yeah, yeah.
paid in California. Who managed
Well,
that trade? What a
but-
nice
but
spread.
Dale-
What a nice arbitrage that was for somebody.
But it's
You know.
completely possible, if you get the structures right, to prepay.
Yeah,
If you could prepay for $2 now, right?
yeah.
What
yeah.
you're doing is a prepayment. Actually, it's a bit like a fully margined futures contract, isn't it? Really, you know, you're actually locking in your price in advance. Yes, you are prepaying it, but the beauty of a credit is that you can trade it if you don't need it. You know, it's like a real estate investment trust where the units are returnable in payment for rent. Right? It's just the credit. It's a really interesting product, but it's not new. It's been around.
All right. Tell us the truth. Tell us the truth. Which of these islands do you have your eyes on that you want to live on?
Oh, I think if I tell you, I've got to kill you. Actually, but no, that's not the case. Dale, it is public. It is public. The island is called Niue, Niue. It's a little island of 2,000 people. It's comes under the umbrella, it's semi-autonomous, under the umbrella of New Zealand. And yeah, it's a fascinating place. My colleague's been out there. I'm too old to go. And it's just about the right size to sort of decarbonize the island using the sort of methods that we're talking about, and the you know, you could call it financial technology, but it's nothing to do with the blockchain. It's just simple, common sense ways of sort of sharing risk, reward, and data. Actually, so we're going to be actioning that during the next 3 months, all being well. You know, making a start on that. Yeah.
What a creative project, Chris. And I wasn't sure what we were going to be talking about today. And I wish you a lot of success on doing this, and let me know if you open an office on that island, and I'll do some IR for you. So
there's only one flight a week, Dale. There's only one flight a week.
That's okay. I don't move around that much anymore either, Chris. So really much success on this. I encourage people to take a look at the new wave. And you have a creative way of, there's probably going to be a whole new universe of investment vehicles coming with this, right? So
Dale, it's a new asset class. It's that big, and in my view, it's the biggest trade of the 21st century coming up. Okay. So I'm hugely optimistic about it, and thanks for your time and giving me the chance to talk about it.
It was interesting. Thanks for sharing your vision with our community today, Chris. Good hunting. You don't trade anymore, but you're still my trading warrior brother for doing an interview with me. Okay.
Okay. Cheers. Bye,
Chris Cook, and everyone, you could follow him at CJens Cook. That's at CJENS Cook on Twitter, and check out the future. As traders, we all live in the future. So thank you, Chris.
More power to your elbow, Dale. Happy trading.
Thank you very much, Chris. Chris Cook, everybody. And you could join the team in 13 minutes on the Morning Edge. Remember, don't just count your windmills, count your blessings. Be back with you tomorrow. Good hunting the rest of the day. And adios. Thanks again, Chris.
Cheers. Bye now.
Cheers.